China's exports tumbled in March, according to official data, dampening expectations for the first quarter growth figures due on Wednesday. Weak global demand and impact of the Lunar New Year have led exports to tumble 14.6% from the year-ago period, as stated in figures from the National Bureau of Statistics. Meanwhile, imports slid 12.3%, worse than the expected 11.7% fall. The March data is closely watched, as it's the first batch of data typically unaffected by the distortions around the Lunar New Year. A weak external environment, slowing property market, and weak domestic consumption have hurt China's economy. The tumble in exports, compared with expectations for a 12% rise, could validate worries about how a rising yuan has hurt demand for Chinese goods and services abroad. The benchmark one-year lending rate in China is now 5.35% versus near zero levels in the US, Eurozone, and Japan. The People's Bank of China, however, has had some success in moderating China's slowdown. A manufacturing gauge rebounded in March, and the nation's benchmark money market rate dropped for a sixth week, the longest run of decline since 2009. However, banks are still cutting back lending to small and medium-sized businesses as SARD loans rise. In a Bloomberg survey on April 10th, the GDP data scheduled for Wednesday is likely to show the economy expanded in the first quarter from a year earlier, the slowest pace since the first quarter of 2009.